Are you struggling as a new trader to remember all these candlestick patterns? Well, in this video, I'll be discussing the only candlestick pattern you need to know that will help you become successful in this market. With that being said, let's get to the video. Welcome back to the channel. If you're new here, my name is Matt, and I teach day traders just like you how to become profitable by teaching different tips and strategies. With that being said, let's get into this one. Okay, the only candlestick pattern you ever need to know. When I found this out, this one really increased my trading and my profitability tenfold. Okay, so down close candles and up close candles. So what I mean is candlesticks like this. See this down candle? Sorry, see this up candle? This big up candle? Price moved away from it. So you can see on my chart, I marked it off right here. And eventually in the future, I knew it had to come back to it. And look what it did. Came back to this the up close candle. That's a level, that's a key level of resistance. Came to it perfectly, then dropped off. So look at this one. So eventually, this up close candle, it's going to need to be traded back up to. So once it gets back up there, you could be a seller and look to take out the lows. This happens over and over again in this market. Show you another example. And when you see more than one, you could just put it together. So on the downside, you see these candles right here. These two candles. Once the market trades above it, all you got to do is wait for it to trade back down into it, and you could be a buyer. And then look, it takes off. Down close candles. Look to the T. Just wait for the market to come back and trade into it, and then it'll take off. And this happens over and over again. You'd be surprised how often it happens. Happens a lot in every single pair. This happens. Please show you a bunch of examples of this. Let's find another one. Downside. See, the thing is, you gotta just be patient. You as a retail trader, you might see this. Oh, it's going, I'm just gonna jump in right here. You jump in and then it takes you right out. If you just wait a bit and wait for the pullback. Up close candle, market trades through it. It turns right back to that up close candle perfectly. Then you exit right here or exit right here. Over and over again, this happens in the market. And these are daily candles, so you could imagine how long you could hold these moves for. show you some more examples. Look at this. Right here. You can do it right here. Enter right here. Down close candles, market trace through it, close back, put your stop right here. And get out up here. Get up here. Once it clears this high, you could get out. That's all you gotta do. Just wait for it to take out the previous high. Or you could even better yet, you could have entered right here if you want a tighter stop loss. Down close candle, market trace through it. All you gotta do is wait for the pullback. Never chase the market. Just be patient. Sit on your hands. Be patient. The market will eventually come back to the down close candles. Come back, takes out the short-term high right here. Look at this. Happens right here. Happens right here. Market trades through it. I'll close candle. See, structure is broken right here, so you know it's going to the ups. It's going to the upside. Down close candle, trade through it, comes back down. Perfect to the T. Takes off. You can exit once it takes out these highs. Or takes out these highs. The thing about this, the only thing you need is directional bias. So once you see like a short-term high taken out, and then it comes back down to that down close candle, like right here, short-term high being taken out, that's a shift in directional bias. And it comes back down, you enter right here, and it takes off. You just take partials right here, or take full profit if you want, or you can hold it, because you already see that even over here that these up close candles were traded up to. Right here. So chances are you're gonna look to take out all of this. That'll give you more of a reason to hold the trade much more longer. Once again, price is consolidating. Short-term high taken out right here. So all you gotta do, wait for the market to come back. This down close candle. It takes off. And if you even miss this one, you get in right here. Because you already know price is gonna go higher because it already took out these highs. So comes back, down close candle. It's through. You can enter on a limit. If you don't want to just wait for the trade, you could just be at a computer waiting for the trade. You just put a limit order right here, and then just wait for it to trade back to it. Put your stops right here. Put your stops. You can put your stops right here. Trade back to it. Takes off. As you can see, this just happens over and over again. So you could put previous highs as the objective to take profit. For some more in some other pairs, it happens in every pair. AU USD, let's check this out. Happens on every pair. on every chart. So if you want to be a long-term trader or a short-term trader or intraday trader, you could just use this pattern on the time frame you want to use. So you could understand that the higher the time frame you do this on, the longer the trade is going to be. So if you do it on 15-minute or 5-minute, you know it's going to be a short trade, and just look to take out the highs or the lows, the previous highs or the lows. So look here, daily chart, down close candle, traded to, traded through. Takes a while to return to it. That's the thing. Sometimes it takes a while because this is a daily chart. So, but if you have the patience, your profit's gonna be a lot more because you're holding the trades for a longer time just to take out these highs right here. That'll be your first target, these highs. These highs and these highs. To see how many days that actually took to get in this trade once it cleared the down close candle. So about a month and a half for this to return back to. So you could wait that long and do other trades in the meanwhile. Or you could, even if you miss this, you got even these ones, but I wouldn't really jump into this because this is more of a sideways consolidation. You get in right here. Or right here, because this high has been broken. This high has been broken. So it's going higher and higher. You can see it's going higher and higher. So all you gotta do is enter right here. Sorry. Enter right here on this down close candle. Look to take out the highs. And you see this shoots right through. And then it comes back again to this down close candle. Pretty much to the T. And the thing about this, you want to make sure you round it up about 5 pips, or round it up to the nearest round number, I should say. Close, comes back down, but you can clearly see it failed to take out this high. So not all the time you're gonna get it, but then what you see here, you got equal lows, somewhat equal lows right here. So once you see the market breaks down here, you know it's gonna go lower. And for me, I want to wait for these type of small candles, quote unquote doji candles, or I'll wait for more of a solid candle. So the more solid up close candle comes back, trades up to it. You sell right here. Could be a seller right here and look to take out these lows right here and these lows right here. And you could see eventually came down and took out these lows right here. I'll show you on a smaller time frame now, 4 hour. 4 hour time frame, sorry. 4 hour, you could clearly see we're in a downtrend. Remember, you gotta have directional bias for this. So look right here. Up close candle, remember what I said? You see two of them together, you just take it as one. So this will be one whole candle. Comes back up, taking out these highs. That's perfect. That's even perfect. If you see like a gap like this in an up close candle, you want to look for it to come back and take out these highs because there's going to be stops right here. It's going to come clear these stops back to this up close candle and then perfect drop. Taking out these lows, these equal lows, perfect. For 4-hour basis. Another one. So even if you miss it on a pair, you can look for another pair for it to enter on, because sometimes it might just keep going, but the majority of the time it will come back to it. See, like right here. It's like to the T. Up close candle. Right, trades through. Structure broken right here. So we just wait. Comes back to the T. And even if you miss this one, you got another entry right here. So you don't even need a Fibonacci, to be honest, if you just want to trade up candles. That's why I say it's the only candlestick pattern you ever need to know. You don't even know all those engulfing and shooting star and dojis. You don't need to know all of that. You just need to know up close, down close candles. As it traded to it, it's gonna, and just wait for it to come back. So if you miss right here, you get in right here. Look to take out the lows right here. And these lows right here, we got equal lows right here. Come through. Shoots right through it. Another target. Got it again. Got this up close candle. Said, like I said earlier, you got this short-term high right here, but there's a huge gap right here in the up close candle. So the market's gonna want to rebalance that, come back, up close candle. So you might have stopped out if you put the stop right here, or you could put the stop right here at the wick. But even if you do get stopped out, up close candle traded through. So you get in right again right now. You just got to be sometimes aggressive with it if you do get stopped out. Up close candle, traded through right here. Comes back, stop right here, drops, takes this low. So this is 1 hour or so. Consider this an intraday trade. Could even go down lower. 15-minute. Look at all this. Takes out these lows. So 15-minute, like I said, down close candles. trade it through it, comes back, hit enter right here. If we take out these highs because they're equal highs, so you know it's probably most likely when it just want to trade through it because it's just too clean. There's and there's stops right here, so came back all the way, cleared the highs. Again right here, up close candle. You probably get stopped out on this one. So you might want to put your stop like right at the close of this candle or right at the wick. The spread might take you out, so you might want to put it a little bit higher. All this got a short-term high. What does it do? It's going to clear out these short-term highs. So look for it to clear out these short-term highs. Even better when you see something like this. So it's just confusing. It's just trying to confuse, but you know that it's going to go lower because it's what happened. It took out these short-term lows right here as well. But you got this up close candle, so it's going to want to trade to it. Make you think it's going higher. Calm down. Takes out these lows. Clears all this. What does it do? Come back down to this down close candle. And eventually drops even lower. This is probably news, so I won't even. So you got to be careful on news releases as well. It might just shoot right through it. All of this up close. This is a mess. Yeah. You can see eventually it traded back up to it, drop down. But I wouldn't trade it because you could clearly see that some type of news release with that big candlestick. Well, let's see, US 30, the big US 30 that everybody wants to trade. Let's see if this pattern happens on US 30. Zoom out a bit. Close down, close candle, trade it through. Comes back a few times. Takes out these highs, comes back. Sorry, it takes out these highs, these short-term highs, comes back, this down close candle, it takes it out, comes back a few more times. Okay, enter right here as well. Down close candle. Takes out these highs as well. No. This one's kind of a mess. But even this candle right here, I want to trade it because it's a pretty small candle. If you want, you could have traded that. I'll close candle. Takes out this low, continues down. And if you miss this one, I'll close candle. I'll take the bigger one. Hits it a few times before dropping. Comes back, hits it again. It drops. See out the lows, which it does right here. So as you can see, this happens pretty much on every single time frame and every single pair. GU. See if this happens on GU as well. She's kind of a mess. GU is a mess. So, see, and sometimes not the whole candle will come back. A wick might just come back and hit the down close candle. So down close candle, traded through, comes back, wick hits it, takes off, consolidates for a bit, few days actually. So these are for long-term traders. If you want to be a long-term trader, as you can see, constantly is taking the highs and going higher. So making higher highs, comes back. The target would be right here. Takes out the high. So if you don't have time to trade, you could just look for candlestick patterns like this with directional bias. Put a limit order here, and it takes off. You just wait. You just put your take profit right here, and eventually you'll trade to it. Let's see how many pips this is. Roughly 665 pips. So you don't have to be at a computer screen all day, every day. You just wait for something like this. Short-term high taken out. You know it's gonna go for this. So it don't take much to be successful in this market. You just need to know what exactly you're looking for, which is down close and up close candles and previous highs and lows to be traded to and through. That's pretty much how this thing works. Got it right here. All these down close candles. Take this as one. And look at the precision on these moves. This comes all the way right back perfectly. So trade through these short-term highs, comes back. You can take profit right here. And you know to take profits right here. These equal highs. It's amazing, right? Let me see. Let's see if this happens on stocks. I want to see if this happens on stocks. Let's see. For those that want to stocks and don't want to be a forex trader. We got 1 second. So you could be a trader at Apple. Let's see if this happens in Apple. Down close candle. Same reason. Trade it through. Comes back. Stop right here. Takes off. Look, take out this high. And eventually it does come through and take out this high. So you can see it works for forex, it works for stocks. So with that being said, I hope you gain a lot of value from this video. Please like, share, comment, and subscribe to the channel if you have not yet. Please subscribe to the channel. And I hope you guys have a wonderful day. Take care, guys.